Welcome to our comprehensive EUR GBP Analysis Report covering the period from September 15th to 20th, 2025. In this presentation, we'll examine the current state of the euro against the British pound, analyzing key technical indicators, market developments, and central bank decisions that have influenced this important currency pair over the past week. Our analysis draws from multiple trusted sources, including TradingView, Investing Live, Action Forex, Forex.com, and Daily Forex to provide you with a well-rounded perspective on market conditions and future outlook. We'll explore both short-term trading opportunities within the current range-bound market, as well as medium-term projections for the next 1 to 3 months, complete with risk assessment and actionable trading recommendations. Let's begin by examining the technical landscape of euro to pound. Looking at the technical picture for EUR/GBP, we can see that the pair is currently trading at 0.8720, showing a modest daily gain of 0.28% as of September 19th. The technical indicators present a mixed but generally positive outlook. Our oscillators are showing a buy signal with 9 neutral indicators and 2 buy signals, while the moving averages are giving a strong buy signal with 14 out of 15 indicators pointing upward. The chart clearly illustrates that EUR/GBP is trading within a well-defined range between the support level at 0.8600 and resistance at 0.8750. The 50-day exponential moving average at 0.8642 is providing dynamic support, and the price is currently positioned in the upper half of this range. The market dynamics for euro to pound this week have been heavily influenced by central bank decisions, particularly the Bank of England's monetary policy announcement on September 18th. The BOE voted 7-2 to maintain its bank rate at 4%, with 2 members voting for a 0.25% cut. This decision came despite UK inflation remaining above target at 3.8% in August, with expectations of a slight increase in September before resuming its downward trajectory. On the European side, we've heard hawkish comments from ECB officials, with Muller stating there's no need for further rate cuts, and Centeno emphasizing that the ECB can't tolerate inflation below 2% for too long. These statements suggest resistance to additional monetary easing in the Eurozone. Key economic data released during the week included UK August retail sales, which beat expectations with a 0.5% month-over-month increase versus the 0.3% forecast. This positive economic indicator provided some support for the pound, though it wasn't enough to trigger a significant move in the currency pair. The pound has been the laggard among major currencies following the BOE decision, continuing its downside run despite increasing calls for no more rate cuts this year. This weakness has contributed to the slight strength we're seeing in the EUR/GBP pair, though it remains contained within the established trading range. Turning to expert analyses, Christopher Lewis from Daily Forex provides valuable insights into the EUR/GBP pair's current behavior. Lewis notes that while the euro has risen slightly against the British pound following the Bank of England's decision to hold interest rates, the market remains firmly stuck in a range. He identifies the bottom of this range at 0.86 and the top at 0.8750, with the price currently sitting near the middle of this channel. His analysis highlights the 50-day EMA at 0.8642 as a rising support level that could offer a foundation for price action. Lewis characterizes this market as grinding higher, not taking off, suggesting a slow, methodical upward bias without strong directional momentum. Let's synthesize the key elements affecting euro to pound in our comprehensive analysis. Looking at the chart, we can see the consolidation pattern that has developed between 0.8600 and 0.8750. The technical indicators confirm what we're seeing visually, a market that's leaning bullish but lacks decisive momentum for a breakout. 3 major news events have shaped the pair's movement this week. First, the Bank of England's decision to hold rates at 4% with a 7-2 vote split has created some uncertainty around the pound's future direction. While the majority favored maintaining current rates, the 2 dissenting votes for a cut suggest growing pressure for monetary easing. Second, UK retail sales data exceeded expectations, showing resilience in the British economy and providing some counterbalance to bearish sentiment on the pound. Third, hawkish commentary from ECB officials has helped establish a floor for the euro, contributing to the slight upward bias we're seeing in EUR/GBP. The performance metrics displayed on the right show consistent but modest gains across multiple timeframes, with the pair up 0.28% over 1 day, 0.78% over 5 days, and 0.74% over 1 month. The more substantial 4.04% gain over 6 months and 5.37% year-to-date suggests a longer-term uptrend beneath the current range-bound behavior. This combination of technical consolidation and mixed fundamental drivers explains why euro to pound is currently lacking the catalyst needed for a decisive directional move. Based on our analysis, let's outline specific trading strategies for the short term, covering the next 1 to 2 weeks. For those looking to take long positions, we recommend entering near the 0.8642 support level, which coincides with the 50-day EMA. This provides a technical foundation for your trade with a clear stop-loss placement below the major support at 0.8600. The upside target would be the resistance at 0.8750, giving a favorable risk-reward ratio of approximately 1 to 2.5. Wait for confirmation of support with bullish price action before entering. For short positions, the optimal entry would be on a clear rejection from the 0.8750 resistance level. Place your stop loss above the psychological level of 0.8800 and target the mid-range area around 0.8650 for profit taking. This setup offers a risk-reward ratio of about 1 to 2. Again, wait for confirmation with bearish price action signals before executing. Looking ahead to the medium term, covering the next 1 to 3 months, we see 2 potential scenarios for EUR/GBP with different probability weightings. Our forecast chart illustrates 3 possible paths: a bullish scenario shown in green, our base case in gold, and a bearish scenario in red. The base case represents our most likely projection based on current conditions. The bullish scenario, which we assign a 60% probability, envisions a breakout above the 0.8750 resistance level, leading to a rally towards 0.8800 and potentially higher. This scenario is supported by 3 key factors: the continued hawkish stance from ECB officials, the possibility of weaker than expected UK economic data, and the underlying bullish technical trend we've observed in the moving averages. The bearish scenario, with a 40% probability, would involve a break below the 0.8600 support level, potentially triggering a sell-off towards 0.8500. This could be triggered by a more dovish stance from the ECB, stronger than expected UK economic data, or a significant improvement in the UK economic outlook relative to the Eurozone. Several key factors will influence which scenario materializes: monetary policy divergence between the ECB and BOE, comparative economic performance between the UK and Eurozone, inflation trajectories in both economies, and broader market risk sentiment. Our base case leans toward the bullish scenario, with a gradual appreciation of euro to pound over the coming months, but we remain vigilant to potential catalysts that could shift the balance toward the bearish alternative. No trading analysis would be complete without a thorough examination of the risks involved. Let's look at the key risk factors that could impact euro to pound in the coming weeks and months. Our radar chart illustrates the relative impact of various risk factors on both upside and downside scenarios. The gold line represents upside risks to EUR/GBP, while the darker gold line shows downside risks. 4 primary risk categories demand attention. First, geopolitical tensions could increase market volatility and drive safe haven flows, potentially benefiting either currency depending on the nature and proximity of the events. Second, an economic slowdown that affects either the Eurozone or UK disproportionately would create significant directional pressure on the pair. Currently, both economies face growth challenges, but a divergence in performance could break the current equilibrium. To conclude our analysis, let's summarize our key recommendations for trading EUR/GBP in the current market environment. For the short term, covering the next 1 to 2 weeks, we recommend trading within the established range between 0.8600 and 0.8750. Our bias leans toward long positions near support levels, particularly around the 50-day EMA at 0.8642, with targets at the upper range boundary. Looking at the medium-term outlook for the next 1 to 3 months, we maintain a bullish bias with a 60% probability of a breakout above 0.8750, targeting 0.8800 and potentially higher levels. This view is supported by the underlying technical trend and the current monetary policy stances of both central banks. The key levels to watch are support at 0.8642, the 50-day EMA, and 0.8600, with resistance at 0.8750 and 0.8800. These levels should form the foundation of your trading decisions and risk management. Speaking of risk management, we strongly emphasize 3 trading discipline recommendations. First, always use a stop loss to limit potential losses. Never risk more than 1 to 2% of your trading capital on a single trade. Second, adjust your position size based on your risk tolerance and the distance to your stop loss. Larger stop distances require smaller position sizes to maintain consistent risk levels. Third, stay informed about the latest news and economic data that could impact EUR/GBP. Monitor central bank communications and economic releases closely, as these are likely to be the catalysts for any significant moves. Remember that Forex trading carries substantial risk, and these recommendations should be considered within the context of your own trading plan and risk tolerance. Always conduct your own analysis before making trading decisions. Thank you for watching our Euro to Pound Sterling Analysis Report. We hope this information helps you navigate the currency markets more effectively.